Welcome back, everyone. Today, we're dissecting the numbers from a key player in India's defense sector, Bharat Dynamics Limited, or BDL.
That's right. BDL is a Government of India enterprise under the Ministry of Defense, primarily involved in the manufacturing of guided missile systems and allied equipment. They play a pretty crucial role in our national security apparatus.
Absolutely. So, they've released their audited standalone financial results. Let's get into the specifics. This is for the quarter and the full financial year ended March 31st, 2025. The Board of Directors approved these results on May 27th, 2025.
Correct. And it's important to note upfront that these are the standalone figures. The report we're looking at doesn't include consolidated reports. Also, the company has mentioned they are exempt from segment reporting as a defense PSU.
Good point. Let's kick off with the key financials, starting with the most recent quarter, Q4 FY25. How did their revenue from operations look on a year-over-year basis, comparing it to Q4 FY24?
Okay, for the fourth quarter ended March 31st, 2025, BDL standalone revenue from operations stood at a very strong 1,776.9764 crore rupees. This is a significant jump compared to the 854.1215 crore rupees they reported in the same quarter last year, Q4 FY24. That's more than double.
Wow, that's a substantial year-over-year increase for the quarter. Now, how does that Q4 FY25 revenue compare sequentially against the previous quarter, Q3 FY25?
Sequentially, it's also a very positive story. In Q3 FY25, which ended December 31st, 2024, the revenue was 832.1369 crore rupees. So, Q4 FY25 revenue of 1776.9764 crore rupees shows a very healthy quarter-over-quarter growth as well.
Oh, clearly a strong finish to the financial year in terms of revenue. That's great to hear on the revenue front. Now, let's look at profitability. The report doesn't explicitly state EBITDA, so we'll use profit before tax or PBT as a proxy. How did PBT fare in Q4 FY25 compared to Q4 FY24?
For Q4 FY25, the profit before tax was 378.1750 crore rupees. Interestingly, this is slightly lower than the 387.8738 crores reported in Q4 of the previous year, FY24.
Revenue more than doubled, but PBT is slightly down year-over-year for the quarter. That's a point we'll need to explore. What about the quarter-over-quarter PBT performance for Q4 FY25 versus Q3 FY25?
Quarter over quarter, the PBT showed strong improvement. In Q3 FY25, PBT was 192.8840 crore rupees. So, the jump to 378.1750 crores in Q4 FY25 is quite significant sequentially.
Okay, so a mixed bag for quarterly PBT. Down year-over-year but up sharply QOQ. Let's move to profit after tax or PAT. What are those numbers for Q4 FY25, both year-over-year and quarter-over-quarter?
The standalone profit after tax for Q4 FY25 came in at 272.7719 crore rupees. Comparing this year-over-year, it's a bit lower than the 288.7764 crore rupees in Q4 FY24. So, similar to PBT, PAT is also slightly down on a year-over-year basis for the quarter.
And quarter-over-quarter for PAT?
Sequentially, there's a very healthy rise. PAT in Q3 FY25 was 147.1254 crore rupees. So the Q4 PAT of 272.7719 crore rupees represents a strong recovery and growth from the preceding quarter.
Understood. And the earnings per share or EPS for the quarter, I believe there was a share subdivision recently.
Yes, that's an important note. The company approved a subdivision of one equity share of face value 10 rupees each into two equity shares of face value 5 rupees each, with the record date being May 24th, 2024. The EPS figures for prior periods have been restated accordingly. For Q4 FY25, the basic and diluted EPS was 7.44 rupees. This is slightly down from the 7.88 rupees reported in Q4 FY24. Sequentially, however, it's a good jump from the 4.01 rupees EPS in Q3 FY25.
Okay, so the quarterly trend for PBT, PAT and EPS is down year over year, but significantly up quarter over quarter. What about other income? Was that a significant factor in Q4?
Other income for Q4 FY25 was 99.5686 crore rupees. This is higher than the 88.4870 crore rupees in Q4 FY24 and also up from 84.4208 crore rupees in Q3 FY25. So, a decent contribution from other income in the fourth quarter.
Now, let's broaden our view to the full financial year FY25. How did the company perform on an annual basis compared to FY24 for these key metrics?
For the full financial year ended March 31st, 2025, revenue from operations was 3,345.0516 crore rupees, a strong increase from 2,369.2751 crore rupees in FY24. However, profit before tax for FY25 was 748.7626 crore rupees, which is lower than the 828.2352 crore rupees in FY24. Consequently, profit after tax for FY25 also declined to 549.6452 crore rupees from 612.7206 crore rupees in FY24. And the EPS for FY25 stood at 14.99 rupees, down from 16.72 rupees in FY24.
So, for the full year, revenue is up strongly, but PBT, PAT and EPS are down. This divergence needs a closer look, especially considering the strong Q4 revenue. Any immediate thoughts on profitability margins?
Given the PAT of 272.7719 crore rupees on revenue from operations of 1776.976 crore rupees in Q4 FY25, the net profit margin for the quarter is roughly 15.35%. For the full year FY25, with PAT at 549.6452 crore rupees on revenue of 3,345.0516 crore rupees, the annual net profit margin is around 16.43%. These are still healthy margins, but the YoY decline in annual profit despite higher revenue is the key point.
Were there any exceptional items reported during the quarter or the year that might explain some of these movements?
No, the financials show no exceptional items for any of the periods presented. So the results are clean in that regard, reflecting ordinary business activities.
Let's shift to the balance sheet. What are some key insights from the standalone balance sheet as of March 31st, 2025 compared to the previous year?
As of March 31st, 2025, BDL's total assets stood at 11,742.4843 crore rupees, up from 10,340.0507 crore a year ago. Total equity increased to 4,008.9508 crore rupees from 3,636.8233 crore rupees. Key movements in assets include an increase in inventories to 2,645.1090 crore rupees from 1,982.4731 crore rupees and a significant jump in trade receivables to 826.3563 crore rupees from 310.4472 crore rupees. Bank balances other than cash and cash equivalents also rose substantially. On the liabilities side, trade payables increased significantly to 1,473.3441 crore rupees from 786.3166 crore rupees. Other current liabilities also saw notable increase. Borrowings remain minimal.
What about cash flows for the full year FY25 and any news on dividends?
For the year ended March 31st, 2025, net cash from operating activities was 167.3892 crore rupees, which is a decrease from 411.718 crore rupees in FY24. Net cash used in investing activities was 407.1252 crore rupees, primarily due to purchase of property, plant and equipment and intangible assets, though lower than the 722.4048 crore rupees used in FY24. Net cash used in financing activities was 220.2492 crore rupees, largely due to dividends paid. Regarding dividends, the board has recommended a final dividend of 0.65 rupees per share, that is 65 paise, on a face value of 5 rupees each for FY 24-25. This is subject to shareholder approval. This is in addition to an interim dividend of 4 rupees per share that was already paid in February 2025 for FY 24-25.
Okay, so both an interim and a final dividend. Now, you mentioned earlier the company is exempt from segment reporting.
That's correct. Note 3 in the financials explicitly states that government companies engaged in defense production are exempted from the requirement of segment reporting, so we don't have a breakdown of performance by different product lines or segments.
Right. Now, let's try to understand the performance drivers and the reasons for that year-on-year decline in profitability for both Q4 and the full year, despite strong revenue growth.
The cost of materials consumed seems to be a key factor here.
Absolutely. The cost of materials consumed for Q4 FY25 shot up to 1,389.919 crore rupees compared to 626.7010 crore rupees in Q4 FY24. That's a massive increase and a primary reason for the lower quarterly profit year-on-year.
For the full year FY25, cost of materials consumed was 2,099.7580 crore rupees, up from 1,119.9592 crore rupees in FY24. Now, there's a very crucial point in Note 11 regarding the previous year FY24. It states that during FY23-24, an amount of 164.9129 crore rupees was adjusted to cost of materials consumed on account of a refund received from a customer and consequent liability reversal. This means the cost of materials consumed in FY24 was effectively lower by this amount, which would have boosted the PBT and PAT for FY24. This makes the year-on-year comparison for FY25 profits look weaker than it might otherwise have been.
That's a very important piece of context. So FY24's profit had a bit of a one-off boost. What about other expenses? They also seem to have risen significantly.
Yes, other expenses for Q4 FY25 were 287.9489 crore rupees and for Q3 FY25 they were 213.6046 crore rupees. These are substantially higher than the 99.3308 crore rupees in Q4 FY24. A major reason for this is explained in Note 12. The company recognized a provision for an onerous contract amounting to 134.611 crore rupees in Q3 FY25, and then an additional provision of 6.7896 crore rupees for the same contract was made in Q4 FY25. These provisions would fall under other expenses and have significantly impacted the profitability in Q3, Q4, and consequently for the full year FY25.
So, higher material costs plus these substantial provisions for an onerous contract and a prior year favorable adjustment explain a lot about the profit movements. Any other significant notes or events we should cover?
A few more. Note 13 mentions an additional employer contribution to the pension fund of 7.8614 crore rupees during FY24-25, which would have increased employee benefit expenses. Note 14 is interesting. It states that inventories include 83.3144 crore rupees worth of items that are non-moving for more than 5 years. However, no provision for redundancy was considered necessary because the company has received advances against these firm orders /LOI, which are in excess of the assets acquired. This is something the auditors have highlighted. And as mentioned, the Q4 figures are balancing figures between the audited full-year results and the unaudited 9-month results.
This brings us neatly to the auditor's report. The statutory auditors are Tej Raj and Pal, chartered accountants. What did they have to say?
The auditors, Tej Raj and Pal, have issued an unmodified opinion on the standalone financial results for the quarter and year ended March 31st, 2025. This is good news, meaning they believe the financial statements give a true and fair view in all material respects. The company also provided a declaration confirming this unmodified opinion.
Unmodified opinion is positive, but were there any emphasis of matter paragraphs ya key audit matters?
Yes, there are two emphasis of matter paragraphs in the auditor's report. It's important to remember that an emphasis of matter does not qualify the opinion. The auditors are drawing attention to, first, Note 12 of the financial statements, which describes the recognition of the provision for onerous contracts we just discussed, the 134.6118 crore rupees in Q3 and the additional 6.7896 crore rupees in Q4. Second, Note 14, regarding the inventory not moved for more than 5 years, amounting to 83.314 crore rupees, for which no provision for redundancy was made due to advances received, as explained by management. The auditors explicitly state, our conclusion is not modified in respect of these matters.
So, auditors are flagging these for attention but are satisfied with the overall presentation. What's the general outlook and what are the potential risks for BDL based on this report?
The outlook seems cautiously optimistic. The strong revenue growth in Q4 and for the full year is a positive sign, indicating healthy order execution. The dividend announcement is also a shareholder positive. Key drivers will continue to be government spending on defense and the company's ability to secure and execute large orders. Risks include the impact of the onerous contract, though provisioned, needs to be monitored. Managing material costs effectively will be crucial. The non-moving inventory, while covered by advances, is something to keep an eye on, as highlighted by the auditors. And, as with any PSU, policy changes or delays in government decision-making can impact operations. Finally, these results are also subject to a supplementary audit by the Comptroller and Auditor General of India.
Right, that's a standard procedure for PSUs. So, to summarize, BDL has reported a strong surge in standalone revenue for Q4 and FY25. However, profitability YoY was impacted by significantly higher material costs and substantial provisions for an onerous contract, as well as a favorable adjustment in the previous year's cost of materials. Sequentially, Q4 showed a strong recovery in profits. The auditors have given an unmodified opinion but pointed out the onerous contract provision and non-moving inventory in their emphasis of matter.
Precisely. Investors should appreciate the strong operational performance on the revenue front, but also understand the specific factors that influence the bottom line this year. The underlying demand seems robust. And it's always crucial to read the notes to the financial statements and the auditor's report in detail. Disclaimer, and as always, we advise investors to check with certified experts before taking any investment decisions.
Excellent breakdown. Thank you. A lot of moving parts in this report. That's all the time we have for today. Join us next time for more financial insights.
If you're listening to this, don't forget to follow our podcast. And if you're watching on YouTube, hit that like button and subscribe for more content.